Today, I want to talk about how right now the shorts cannot meet margin requirements and cannot pay for margin calls. I also want to talk about how this ties into AMC's shares accumulated versus distributed. So stay tuned and let's make some money. So let's dive straight in with the key information. So, as you can see, China shorts can't cover margin calls after the biggest one-day face ripper since Lehman. As you can see, the Chinese market just had the biggest one-day jump since September 19th, 2008. On Friday, the entire Chinese stock market gained 6.5% in one single day. And it says among those who are certainly not ready for the biggest Chinese rally in 2 decades were the country's hedge funds, which faced additional margin calls as shares continue to surge on Monday. It says some managers informally conveyed to regulators the need for more time to meet margin requirements. It suggests some hedge funds did meet margin calls, but others did not. It says this caused huge losses for short hedge funds, which are normally levered anywhere between 10 times and 100 times. And this actually led to a number of liquidations in Chinese hedge funds. Many are saying these short hedge funds won't be margin called and liquidated now in 2024. They say it may have happened back in 2008 when many hedge funds and banks were liquidated and closed down during the financial crisis, but it wouldn't happen now. But this is just living proof that many hedge funds in China are already being liquidated now, and many hedge funds, even in the US, have been closed down over the last 2, 3, and 4 years. You will know I've shown you many times the photo from Biotech Moose of all of those hedge funds which have collapsed over the last 2, 3, 4 years. And all we need is something like this happening to AMC and GameStop, a sharp increase in price to liquidate a number of other hedge funds, furthering a short squeeze. And as I said at the start of the video, let's also talk about how this ties into AMC's shares accumulated versus distributed. So this chart on TradingView, or this indicator, obviously shows the shares accumulated versus the shares distributed. Basically the net difference or the net total of shares bought minus shares sold. So in theory this should be net nil because all the shares that are bought should also be sold as well. But we can see from TradingView that AMC is showing 4 billion shares accumulated versus distributed. Now the weekly demand is suggesting that shorts never closed if there's 4 billion more shares bought than have been sold, or theoretically it also means there's 4 billion synthetic shares. And in terms of GameStop, GME actually has 8 billion shares accumulated versus distributed, so twice as many as AMC. Now in my mind it doesn't matter which stock has more shares accumulated versus distributed, which stock has more or which stock has less. All that matters to me is that both of these numbers are absolutely huge. And therefore, obviously, when one of these stocks squeezes, the other stock will squeeze alongside. I quickly wanted to touch on today's trade in the Millionaire Mindset Trading Group, a 64% gainer on KXIN. We can see in the pre-market, I told the group that I was watching KXIN, which had set a pre-market high at 18 cents. And if it can get that breakout, the stock should move very fast. I said I'd set my price alerts to buy that breakout. Later in the pre-market, it got that 18-cent breakout and ran all the way to 29 cents for a 64% gain. As usual, we have many people in the group capitalizing, making 10, 15, 20, 25% gains and more. So guys, be sure to join the Millionaire Mindset Trading Group using the link in the description below for daily gains just like these. I also saw this brilliant tweet from Kristen and this brilliant article as well about what happens to short sellers over in Korea. It says that illegal short selling is now to face a maximum life sentence with the new amended Capital Markets Act. It says under the new law, individuals who make illicit gains of more than 5 billion won or just $4 million through illegal short selling will face aggravated penalties with prison sentences of up to life imprisonment. Institutional investors are also now legally required to establish an electronic short selling system. I think it's brilliant there's now some actual punishment for illegal short sellers. Now all we need is the same law coming over to the US as well. I also wanted to talk about how Citadel has been trying to muscle into the Chinese stock market so they can steal from China as well for ages, but has been denied at every turn. Back in February, Citadel tried to buy Credit Suisse's subsidiary in China, but was outbid by Jack Ma's Ant Group. Citadel has been looking to set up an exchange and a market maker in China for years, but has failed every single time. This is after Citadel was actually kicked out of the Chinese markets many years ago for, you guessed it, illegal short selling. It seems the only country that allows Citadel to operate in their markets is the United States. Also guys, if you haven't already, be sure to join Moomoo, as you can currently get up to 15 free shares and 8.1% interest on uninvested cash. Moomoo has also just released cash accounts which do not lend out shares for share lending. This means the shares in your Moomoo account won't be lent out to short sellers for them to use to short stocks. And finally, I also wanted to talk about this tweet from the SEC. So they tweeted saying that fraudsters may use social media to promote a stock or to spread negative rumours about a stock. Which, as Phil For Real has pointed out, is really ironic because mainstream media articles or publicisers like Motley Fool, Investor Place, Yahoo Finance and even CNBC spread negative rumours, even fake negative rumours about stocks constantly. It's funny how these mainstream media publicisers never ever get into trouble, but yet the SEC is warning about exactly what they do. Now I actually think this tweet from the SEC is in relation to this page, Flash Alerts, which consistently gives fake alerts on stocks issuing new dilution or fake mergers. It's something I've seen a lot of recently, but it's crazy the SEC is cracking down on an account with 430 followers, but not many mainstream media publicisers. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.